Steve, I would turn to you. I think beyond where a Fed put might be, to play off of what Steve was talking about, I think the greater conversation within the market universe is where's the Trump put at this particular time if things continue to deteriorate. The president doesn't seem to be very moved by any of this to this point. Pulling into his golf club down in Florida earlier today while the markets are going down, saying that his policies will never change earlier as well. You can take from that whatever you will, right. But how would you react as a market participant who's watching stocks plunge yet again today?
Well, here's how I reacted. So I have no market exposure at this point at all. I'm completely hedged out. So market goes up. I don't make money, market goes down. I don't lose money, as you know, since he was elected. And I was looked side-eyed at this when I said very clearly that Trump will not be good for markets, will not be good for the economy. That's, in fact, turned out to be true. So the way I describe this is that the U.S. has gone from hunter to prey. And despite him being the great negotiator, which nobody's ever able to point out where he's been a great negotiator. I could point to his purchase, setting an all-time high record for a hotel at $400 million, only to turn around and sell it at a loss at $325, only for those buyers to turn around and sell it for $600 as evidence that he's not. So what I mean by we've gone from hunter to prey is that he underestimated what his adversaries, which he views as adversaries, I view as trading partners, can do. So they've got their own constituencies. So they cannot be viewed like a weak-kneed law firm as kowtowing to the president, because their referendum is by their people. So, look, I think we've got real risks here. I think the market right now, the average 25-year multiple is under 17 times. We have only begun to see, led by David Kostin, a decline in earnings. If you put a 17 multiple on his, I think he's at about 240.
He's at no,
he's 265 next year.
For next year. He's down to 269 for next year. I'm talking next year. Right. This year almost seems like, I mean.
Well, this year, we're still early this year, and there's so much that could happen, and typically you would look at another year. But this is not a typical year in terms of the events that happen on a day-to-day basis that have to really inform your view, rather than, as Jim is likely to point out, and he's a good investor, that the jobs number was strong. That's historic. Doesn't include the cuts. Doesn't include the cuts we're going to see corporations. So the bottom line is, I think that next stop could very well be 4,500. It could go lower. Right now, we're still trading near 20 times on a forward 12 basis. You trade at those extended multiples, and they are historically extended when you have an accommodative interest rate policy, when you have clear strategies and an economy that is still moving forward. Here you've got the opposite. Stagnation remains the most important word. And to Steve's points, and Steve is must-see TV because he's one of the best thinkers on the network, present company excluded.
Thank you.
Those are the questions.
No offense taken.
The Fed can't do anything. There is no Trump put. Trump's not going to back away. And if he does, it's not good either. It just breeds the uncertainty. So bottom line is, I'd rather miss 10% up than catch another 10% down, because this is when you protect capital, not when you make bets because you think that's what your clients want you to do.
Tony Pasquarello's call of a week ago seems so prescient in terms of preservation of capital, right? The game has changed. I'm paraphrasing from his note that he put out last week, or maybe it was at the beginning of this week. I don't remember, but the point was clear. Preservation of capital, the game has changed. A game in which, Jim, RBC's Lori Calvasina has now cut her S&P target for the second time. She's at 5550 for the year. UBS joins the parade of firms that have downgraded U.S. equities. They cut their price target as well for the second time. They're at 5,800. JP Morgan talks today about there will be blood. The odds of a global recession this year to 60%. Mohamed El-Erian, uncomfortably high, the risks of recession. Jeremy Siegel, biggest policy mistake in 95 years. Ed Yardeni, I pointed out earlier this week, you lose him, you lost it. Because he's just bullish. getting harder to be optimistic. He said, when you lose the editorial board of the Wall Street Journal, they've been critical of tariff policy from the outset. Quote, Mr. Trump is acting with little understanding about the damage his tariffs will cause. The quote-unquote disturbance might not be as little as he imagines. The FT says it's America's astonishing act of self-harm. What do you do with all that? What do you do?
I think what you do is you ask the question, what is the market pricing in at this point in time? Clearly, the risks have risen extraordinarily. My take, and this is very subjective, is that today's actions combined with yesterday's action is the market's way of embracing all of the negative and not even the slightest possibility that this could work. What is this that I refer to? This is the new economic ideology. It's very clear what it is. I don't care whether you agree with it or not. The ideology is we're going to replace income and corporate taxes with tariffs, and we're going to do that in a context of a smaller government. I have no idea if that will work or not, nor does anyone else. That's the bad news. The good news is we're going to find out. We're going to find out pretty quickly. As far as the Trump put goes, and I'm in agreement with you on this, Steve, I would not want to see the Trump put in play because America wants to right now know what the rules of the road are and go forward with them. I was at a client dinner last night with 25 clients, many of whom were business owners, and most of them were talking about, okay, if these are the rules of the road, then let me adjust to it. Let me adjust production where it needs to be. Let me control costs where I can and move forward. That is American ingenuity. That is American drive. That is ingenuity and drive that far surpasses ingenuity and drive anywhere else in the world. It is what has always come to the rescue in moments like this. It may take time. It may take time. I'm not saying that today is the bottom, but I will say that down 15% in the S&P 500 is not a point at which I want to sell.
There are some things, Bryn, that investors are going to look at and say, you know, it's so bad, it's got to be good or close to it at this point. I point out your move today in Nike, down 15% this week, right in the crosshairs of tariffs related to China. And you bought it. You bought the stock. Why? Why now?
Really more Vietnam. I bought it yesterday, and really it's in relation to Vietnam. And so I think that whoever made that board that Trump had out should be fired with the math. Vietnam does not have a 90% tariff. It's absurd. They have a 5% tariff. And so what we have to decide as a country is what do we actually want to manufacture here, and what do we actually want to manufacture in great countries like Vietnam. Nike, Restoration Hardware, Wayfair all moved much of their manufacturing out of China during Trump's first presidency into Vietnam. Vietnam is happy to make these. Nike pays these people probably like $5,000 or $6,000 a year. They're happy to make them, and we do not want to export those jobs. My sense is there is going to be a reckoning between the U.S. and Vietnam. And actually, I think 20 minutes ago, Trump posted on his True Social that he just had a conversation with the General Secretary of Vietnam, and they want to bring down their tariffs, which once again are 5%, not 90. And so to me, it's like a beaten up name. I just think it's overdone. I think the stock could trade back up to $70 pretty quickly because we do not want to import these types of manufacturing to America. No Americans want those jobs. So to me, it was a trade. I think it's a fat pitch. I think Wayfair, Restoration Hardware, I think you're going to get some reprieve from these types of American companies doing the right thing.
You got anything, Jason, on your list in the spirit of what Bryn is doing and looking at in the market? What do you think?
Yeah, so I mean, there's a couple of things for me. As it relates to retail, obviously, you look at the RH blowout yesterday. I mean, the stock's down almost 40% in the last 2 days. You know, an American Wayfair, there's a number of names that I think have gotten really punched in the mouth. For me, I think about Apple, right? 90% of Apple's assembly and supply chains are in China. The stock was down almost 10% yesterday. It's down a lot today.
Below $200,
below
I think, right?
200
earlier, yeah.
It's felt a lot of pain. We came into this year talking about the blunders in AI, and that was the concern. That was the weight on the stock. Then we start to look at the multiple, and then we look at the earnings growth. And obviously they've been moving their supply chains to India. They've been trying to figure out other things. But when I think about companies like that, they're the greatest companies in the world that sell premium products and have continued to monetize their services business. I think that this move is somewhat overblown. And those are the types of names that we like to take.
I mean, the mag